Roundtable, sponsored by Global X ETFs.
Welcome to Barron's Roundtable, where we get behind the headlines and prepare you for the week ahead. I'm Jack Otter. Coming up, the Federal Reserve hiked interest rates to squash inflation, but BlackRock's Rick Rieder says higher rates are actually keeping inflation elevated. He'll share his investment playbook. And later, Elon Musk is jumping for joy, literally, as he scores a massive pay package. What's next for the tech titan and his multi-industry empire? But we begin with our expert panel and three things investors ought to be thinking about right now. On the Barron's Roundtable, my colleagues Ben Levison, Teresa Rivas, and Al Root. So, Ben, it was a pretty good week for the markets. Once again, focused on inflation. The inflation story looked a little better. So, for the most part, stocks went up.
Yeah, for the most part, they did. And that inflation number was great. It was showing inflation is actually starting to come down again after a bit of a jump at the beginning of the year. That means the Fed, though the Fed came out and said, oh, no, we only expect one cut this year, actually is going to probably cut sooner than maybe it had been expected, even though they're being the Fed. And then you had Apple come out and have it had a conference where it put out its AI strategy, and that looked good enough to convince investors that, hey, you know what, maybe Apple hadn't skipped the whole AI thing, and that stock soared. So you ended up with a very good week for the S&P 500. It was up over 1.6%.
And up 15% on the year. Contrast that with the Dow, had a bad week and it's up only 2.5% all year. What's going on?
Well, the Dow in some ways reflects the total market. If you actually look at the S&P 500 versus an equal weighted index, you see that it's actually the market cap is doing much better. The equal weighted index is kind of muted. And if you look at the stocks themselves in the S&P 500, this week there was about one winner for every two losers. The Dow, though, is actually worse than that. When I looked at it midday, there were 5 winners out of 25. That's 16%. That's really bad. And part of that is stock selection. They're one chip stock. Chip stocks are doing great. Their chip stock is Intel, which is doing terribly. That could be swapped out for something like Micron. And then you have Cisco in there, and Cisco hasn't been really a thing since the .com boom. And that could be swapped out for something like an Arista Networks. But so you do have the Dow really underperforming right now.
Once those are swapped out, of course, buy them. Because when stocks leave the Dow, they do well.
Yes, exactly.
Yields went down naturally on this inflation news. Bond market's looking pretty healthy.
Yeah, the bond market, I think what's going on is that, first of all, the inflation looks like it's still heading towards 2%, and that's good. But there also may be a little concern about the growth outlook being built into the bond market, too. When people start worrying about growth, bond yields, they buy bonds for safety, and that may be going on. It may be too soon to tell, though.
Real quick, what are you looking for next week?
I'm looking at jobless claims. They had a big jump this past week, and we need to see if that is the beginning of a trend or if it was just a one-time spike.
Yeah, they tend to lead payrolls. So, all right, Teresa, we had a big development in a disease that's devastating to patients, to families, Alzheimer's. Tell us about the medical news.
Yes, so a panel of FDA advisors unanimously agreed that Eli Lilly's new Alzheimer treatment looks good. We don't really have a timeline on when the FDA might actually take action on that, but it's still really good news. Anti-amyloid antibodies are a very tricky drug to administer. So this news is not only good for Eli Lilly, but for drug makers across the spectrum that might want to make these kinds of drugs. You need a lot of infrastructure because patients need to be constantly monitored and go to centers for infusions when they have this. So what's good for one drug is good for the whole class.
Already switching to a very different health concern. There's no reason for panic yet, but a disturbing development on the bird flu front.
That's right. So unfortunately, bird flu was discovered in the muscle tissue of a dairy cow. Now, as you say, there's no reason to panic, but it is concerning to see it in new parts of the cow because it means it's a more widespread disease. And it also means there's new routes of possible transmission. Again, this was not a cow that was going to be consumed. So there are a lot of safeguards in place. But at the same time, we want to continue to keep an eye on it and not be complacent.
Already, definitely have to keep an eye on that. Al, you have been covering Boeing for years. More bad news this week. More helium leaks from the Starliner capsule docked at the space station.
Yeah, docked at the space station. It was Friday or Saturday, but it's been at the space station for about a week, and they're doing a test now. This is a test. So to some extent, you would expect problems. Boeing has had a lot of problems. Almost every one of these tests have been delayed by about a month. So Everybody's safe. It should have, it shouldn't be a problem. They're, triple redundant is a word they use. So there's 3 ways to get back to Earth. This is one of them, and they'll probably fix it. But they're going to be up at the space station a little longer than they expected.
Meanwhile, Dave Calhoun will be in the hot seat in front of Congress testifying about Boeing.
Yeah, and the space business is a small portion of the defense side of the business. Obviously, we want to see Boeing make planes. FAA Administrator Mike Whitaker, their chief regulator, was in front of Congress on Thursday. Dave, Mr. Calhoun's going to be there on Tuesday, and it is all going to be about quality, how they plan to fix things, the progress that's being made, improving the culture, improving the processes. So it's more of the same that sort of sent Boeing stock down about 30% since that door blew off in flight in January. So that's what to look for with Boeing.
Alrighty, and before we go, only 4 planes or only 4 orders for planes in the month of May, but you say that's not a big concern?
Yeah, month to month, the numbers can be anything. And then also there's a big air show in July, the Farnborough Air Show. That'll be fun. They all get together, wine and dine each other and make big announcements. But the backlogs are so big, they got to make them.
All right, thanks, Al. The Fed standing pat this week as interest rates remain inflated. BlackRock's Rick Rieder on how investors can play the higher for longer environment next. The Federal Reserve holding interest rates steady after this week's policy meeting as officials signaled just 1 rate cut this year. My guest has advice for investors on how you can take advantage of the higher for longer scenario. Joining me now is BlackRock Chief Investment Officer of Global Fixed Income, Rick Rieder. Rick, thanks so much for coming by the studio.
Thanks for having me. Appreciate it.
So, there's been a lot of discussion about how much longer the Fed has to keep rates where they are to tamp down inflation. But you're making the case that these higher rates may actually be sparking inflation more than keeping it down.
So, I would say it's ambiguous as to what the effect is, but it's definitely not helping to actually keep it this high. There's a couple of things that are historic. You had this massive transfer of money from the government to the private sector. It's actually made the private sector a net creditor, a net lender in aggregate. Pretty extraordinary. Think about what higher rates for if you're a net lender. That's pretty spectacular in terms of the benefit. And then, by the way, those people spend, it gets into services. That's why service level inflation, part of why service level inflation is high. Second thing that's amazing is the aging of the population, which has been historic. Older people tend to be net savers, interest rate benefits, and it's pretty incredible when you look at things like healthcare insurance, et cetera. So it's not having that significant impact. If you drop rates 100 basis points, you're not going to see any tangible acceleration of inflation, and it's going to help small business, lower income that's hurting from this.
You had an incredible statistic about all the new income people have from higher rates just from savings accounts. I think $1.2 trillion in new income just from higher savings rates.
So you think about how incredible that is. And so, by the way, when you aggregate the economy and say the economy is in good shape, and it is, but what's happened is there's a stratification now. There's a 2-speed economy driven by that immense amount of income going to higher income, generally older parts of the population that have already paid down their debt. And so what's happening is keeping the economy in good shape, it's keeping growth in pretty good shape, but there's a balance.
Sure.
And this balance of can you equilibrate the economy more effectively? And I think you can. And certainly don't think it'll have an adverse impact on inflation.
I'd like to hear what you think the path of interest rates is. And you have 2 charts that are kind of interesting showing the dichotomy between goods, which have come way down. In fact, I think it was below, it's actually disinflation. And then services, obviously, as you said, are up. But what was amazing to me was the vacation prediction.
Yeah.
That's unlike anything we've ever seen.
So I'd say first thing is on this chart. So now if you look at year on year, core goods is negative. Pretty extraordinary. Think about where we were. We were running at double-digit post-COVID. By the way, the thing that interest rates are most sensitive to is goods. That's what's more sensitive. Service inflation is still sticky high. Why is it? This shift that I talked about to services, but also it's a cultural change. People are spending more on experiences, restaurants, hotels, airlines. You look at this, people planning a vacation. There was a surge after COVID. I'm locked in my house. I need to go on a trip. But it's a persistence to it that is real. And I think that's structural. I think it's cultural. And it's a good economy. And it's a good economy with a cohort of people that has money to spend.
Okay, let's talk about the investing playbook here. You're a fixed income guy mostly, but you manage some equities. Tell us where you see that market.
Listen, it's pretty incredible. If you go back in time and think about for years, we were working on 0% interest rates, 1% interest rates. Now you can build a portfolio The risk-free rate in the front end of the curve is 5 3/8. You can build a portfolio 6.5 to 7. You don't have to go out the yield curve. You don't have to take a lot of risk. You can stay in high-quality assets, AAA CLOs, agency mortgages, investment-grade credit. Build 6.5 to 7. Use a little bit of high yield. High yield market's in way better shape structurally than ever before.
You've got a new ETF, BINC, that's doing well.
Yeah, so we're a 7% yield horizon rate of return over your holding period. And if you think about what that means, it's the average rating is high BBB. It's 60% the volatility of the high yield market. Better, higher quality, more diversified. We use securitized assets, investment grade. We use parts of Europe where growth is slowing. You want to be a lender.
Because those rates will come down, you think?
Those rates will come down. They'll come down faster. And you can buy investment grade companies as a dollar investor, get 5.5 to 6%. By the way, we used to lend companies in Europe at negative rates. Remember negative interest rates? The craziest strategy ever. But now, so you can build income and you can own your equities. And I think the equity market's in good shape. So you can create a nice balanced portfolio, income and equity. That's different than 10 years ago where you had to own way more equities because you couldn't get the income otherwise.
All righty. Rick Reeder, thanks so much for coming by. Good luck to the Orioles this weekend.
Thank you very much. I'm pulling. Thank you very much.
Elon Musk celebrating his newly approved massive pay package, the biggest ever for any CEO. But is he worth the huge check? And what's next for his multi-industry empire? That's coming up.
I just want to start off by saying, hot damn, I love you guys.
It's payday for Elon Musk. Tesla shareholders voting to reinstate his nearly $50 billion pay package during their annual meeting in Austin, Texas. That's the largest sum ever for a CEO. To put it in perspective, Musk's package is about twice the free cash flow Tesla has generated in its entire history. It's 35 times bigger than what had been the largest pay package to a public company CEO. Al, to say that Elon Musk is a polarizing figure would be the understatement of this show, if not the day. So on the one hand, he's clearly a genius. On the other hand, Wall Street Journal reporting about sexual misconduct, drug use. He posts things on X that would get many executives fired. Is Elon Musk worth the payday? Would Tesla be better off without him?
So I say two things. Definitively, he is worth it, which seems crazy. And I also feel like he's overpaid. So you mentioned all those numbers. He was given essentially 12% of the stock outstanding in that award if he could make the stock go up 10 to 13 times. He basically did make the stock go up 10 to 13 times, which is why he has that $50 billion in options. So on one hand, he did it. And he did it because he's Elon Musk, and we could talk about that. And on the other hand, I really don't think anybody is worth 12% of the stock outstanding. So Tesla is better off with him, despite some of those allegations. And he's sort of a unicorn. You have to take the good with the bad.
Sure. The company is Elon Musk in many ways. Okay, so what happens next? It's not as if he goes into the office and somebody hands him a $50 billion check.
Well, on the deal, on the pay package, it was rescinded by a Delaware judge in January. I mean, officially, she would need to rescind her decision, say, okay, the shareholders have voted twice. Most people feel like that's likely. But there are steps to happen into the future. I think that most of the drama is over from the pay package. There'll be dribs and drabs of things that happen, but this is a boost of confidence for Musk.
And meanwhile, Governor Greg Abbott of Texas has tweeted his congratulations.
Yeah, so Tesla has reincorporated in Delaware. And
Texas.
In Texas, leaving Delaware, thank you. And the question is, well, are people going to follow? I mean, Musk is unique. I don't see other boards saying, oh no, a judge overturned our shareholders' decision. I mean, this is the biggest pay package. It's Musk.
So, Al, as you said, I mean, this package was designed to give him a big piece of the company. The incentive seemed kind of strange. Is there a better way to structure that?
So, I love the theoretical discussion of building incentive packages. This sort of said, if you can make the stock go up 13 times, we'll give you an unbelievable amount of money. And what that leads to some extent, is moonshots, right? Musk talks about autonomy, robots, Optimus, and lo and behold, they need a lower-priced electric vehicle. Not as sexy a project, but maybe that would have been prioritized if you had different incentives. So I love the idea of market-based incentives, what the stock does, and also operational incentives, margins, market share. So when this comes around again and they want to give him another $20 billion, maybe they can balance it out.
So Tesla's basically back where it was in November 2020. What has to happen to make the shares restart again?
Yeah, 2021, when EV fever was at its height and Tesla stock was north of 400 at some point. He really needs to do three things. So Musk, this is qualitative. Musk has to show he's engaged. Since 2020, he's added two multi-billion-dollar companies, XAI and Twitter, which is now X. So he's got to show people that I am at Tesla all the time, or else this drama around him will continue. He needs to get that lower-priced EV out. That's incredibly important. Then we have Robo-Taxi Day on August 8th. He needs to blow us away with self-driving cars.
If he doesn't do that, is Tesla just basically a meme stock?
I definitively say it is not a meme stock, but it's a really interesting point because 45% of holders of Tesla stock that are available to trade are held by retail investors. That's basically twice as much as the big tech firms. So Elon's shareholder base is retail investors like me and you, not institutions managing billions of dollars. And that's interesting. You really see that in the annual meeting because the quality of questions, I'm going to say it, like if you watch Buffett's annual meeting, the types of questions, the sophistication, they are not matched by Tesla's annual meeting questions. It sounds pejorative, and it is.
It's more of a fanboy club.
Yeah.
So Al, I thought AI was always supposed to be a big part of the Tesla story, but now Musk has this XAI company. What's going on there?
Well, Musk said earlier in the year, I want 25% of the company to keep AI projects inside of Tesla. We've talked about this. This is. I got to give you credit. This is pretty much your insight. I think that ship has sailed. He has, with these options, he has about 20% of the company, and now he has XAI. I think a lot of the AI development will happen in XAI. The trump card for Tesla is he will keep all of the autonomous driving. He trains those cars with AI computing, and that's part of the AI story at Tesla. That will be Tesla, but XAI is going to do AI things that maybe in the past Tesla investors would have hoped stayed in the company.
Alrighty, thanks, Al. So Ben and Al have a pair of investment ideas, and Teresa takes a look at whether an activist can fix an airline. Stay right there. So, Teresa, Southwest Airlines used to be known as the fun one with comedians and low fares, and now there's some turbulence, to use an overextended metaphor.
Certainly. So Southwest, like many other airlines, had problems in terms of labor costs and capacity, but they've been more troubled than most. I think we all remember the service meltdown that happened last year. It turned off a lot of people, and they've been struggling ever since.
All right, so customers complain about all the fees that are added on. You recently paid one of those fees. How was that?
So I paid to choose my seat on Southwest, which basically made me queen of the airplane. I was the first person to get on, and I felt like I owned the whole thing. But there are plenty of people who would not want to pay for that experience. Now, Elliott Management wants to raise revenue by charging people for things like seat selection, for checked baggage, but I don't think that's a sure thing. A lot of people simply don't want to pay for that, and if they don't have any other choice, they'll stay home or they'll go to another airline.
Yeah, Elliott even wants to oust the CEO, so that'll be fun to watch for those of us who have no skin in the game.
For certainly. I mean, this is a relatively new development, so there's no telling what'll happen for here, but the typical analyst playbook is the typical activist playbook's likely to play out.
Alrighty, thanks, Teresa. Now we'll go to actionable ideas. Al, what do you have for us? It's a surprise to me.
So we have seen industrial stocks take it on the chin, my beloved industrials. I would stick with things like commercial aerospace where demand is good. Aftermarket parts supplier TransDigm, it's down a little bit. It's a very high quality company. The more planes that fly, the more parts it'll sell. TDG is the ticker. I think that's a one to buy the dip.
Does it sell bolts to keep doors on?
Yes.
All right, thanks. Ben, what do you have for us?
I'm looking at PG&E, a California utility. It's not your typical utility stock. They declared bankruptcy because of they owed a lot of money because of wildfires that had gotten started, and they don't even pay a dividend. But they are coming back, and they are actually under this California regulatory regime, which it actually is a good thing because we know how they're going to be treated, which you can't say about a lot of utilities in states with fires that don't have that yet. So it's a stock that's actually looking really interesting right now. They just had an investor day that was well received.
And utilities are having a day in the sun. That joke is on purpose. Renewable energy is really sort of helping that industry. They're doing very well.
That's right.
All right. Thanks, Ben. Thanks, Teresa. Thanks, Al. To read more, check out this week's edition at barrons.com. And that's all for us. We'll see you next week on Barron's Roundtable.